Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here. All right, so first and foremost, we're going to get into the markets, what they're doing today, but we got to talk about Oracle, right? Oracle yesterday coming out, falling sharply in the afternoon after announcing some major news. What was that news? They lost $100 million on a data center AI situation where they were renting chips from NVIDIA, and their margins were so much less than they anticipated that they actually lost money. Now, the reason I bring this to your attention is not because Oracle went down on that news. It's because remember when they reported earnings, there was this massive backlog. The stock was up 45% intraday. It was the biggest move on a big cap that we've ever seen. And then wait a minute. Holy cow. So you're telling me that not every company that's in AI is going to make a boatload of money? Because every stock in AI in that vicinity, software, data centers, chips, they're all priced to perfection. Something's starting to crack here, folks, and you need to pay attention. We're going to go into the charts now and take a look. This is the ES. We'll go to the NVIDIA chart in just a second, but I just thought that was a very interesting news story yesterday that came out. By the way, folks, one more little tidbit. The margins they expected were 70% margins. They came in at 14%. I mean, that's massive. Think about the estimated profit that they would have made on 70% margins versus 14. Huge, huge difference. And the point being here again, folks, is that not every stock in AI is going to be a winner. There are going to be plenty of losers, but they're all priced as if they're all going to make a massive amount of money. Be very careful. We are in a bubble in AI. I think AI is going to change the world, just like the internet did in 99, 2000. Doesn't mean stocks overall are not priced to perfection. All right. The ES futures are trading slightly higher this morning. So we had this beautiful dump out yesterday. This was led on the back of the chip stocks falling. So again, the AI trade started to collapse. This was even prior to the Oracle news. Beautiful move to the downside in the S&P. We then kind of chopped sideways to up into the end of the day, and we've continued that overnight. Now, as a technician, what do I look for? Even on the futures, you can still draw trend lines, and you have this beautiful potential bear flag formation on the S&P futures. Let's watch to see if we break this low today, intraday, we should see the lows from yesterday and possibly even lower. Let's flip over to the daily chart of the S&P futures. Now, yesterday, we were talking about the topping tail that was also at this upsloping trend line, which is part of the wedge pattern. And what we talked about is, okay, yesterday markets were gapping up. Was it going to fail? How would it fail? Where is failure of the topping tail? We pierced the high yesterday, and then we sold off on the S&P. The topping tail is firmly intact. So again, as a technical signal, this is still a bearish signal right here. The fact that it coincided with an exact hit of that trend line is significant. It's something that we have to pay attention to. All right. So again, that's something of interest here. Now, if I zoom all the way out here, I want to show you one more thing, folks. Again, this is just adding fuel or breadcrumbs to the potential of this situation. But if we connect all these lows here, I want to show you guys something. Look at this. Bring this up. See right up to the bull market high of 2021. This is the daily S&P chart. So you're taking your COVID low to your low here in October of 2022, which was your bear market low, to your subsequent bigger pullback in October 2023, to your liberation sell-off low, and then you go to your bull market high. Look at that right there. And so again, what's really cool about this chart, which just gets me so excited when I do this type of analysis, is that, listen, this could fail. We could break above here. Sure, absolutely we could. But are the odds favoring that, or they're favoring downside? And when you have three trend lines here, the odds certainly favor, well, two trend lines and a topping tail, they favor a pullback. Now on the QQQ, we got briefly above this level here. So this line is a very interesting one. We know the Qs have a big weighting towards the AI, NVIDIAs of the world, the chip stocks, even AMD going up had an outsized impact because AMD is a $300 billion plus stock, right? So it's going to have a big impact on the NASDAQ 100. But this trend line, this is what I'm watching. Here's your low from COVID, goes right through this low to these highs going back to July of 2024 to December 2024, and we're right into that range. Now, if we go back to the daily chart, we closed above, we didn't confirm, we came back below. We closed above, we confirmed. What does it mean that this trend line now becomes? major support, right? Once you confirm a breakout above a trend line, that trend line becomes major support versus minor if it's unconfirmed and you're above. Look at how price has behaved now. It comes in, bounces up. Comes in yesterday, bounces off the line again. Now, the more we hammer on this line, there's a bigger probability starts to creep in that we break back below it. If you break back below it and we reconfirm below this trend line, that would be huge. And the reason I say that is in technical analysis, the biggest moves come from failed moves. Why? Why, when you have a breakout that fails, do big moves usually come if it fails and basically confirms back to the downside? And the answer is this: because you lured in a bunch of people or investors. All right, number one, you stopped out a lot of bears, right? So it got above the level, it confirmed, all right, the bears throw in the towel. They just throw it right in. So you're getting the bears out, which means if they re-short, that's more selling pressure once it breaks back below. But also, if you go up and you get above that, you have a bunch of longs jumping in thinking it's a new breakout for another big move up. If it fails, all of those people panic and dump as well. And so there's that. That's why you usually get big moves. And the old adage is the biggest moves come from failed moves. Remember that, folks. That's a big one. All right, so we're going to keep an eye on this trend line here on the QQQ. Right now, today, it would currently sit at 603. 603 on the QQQ. The dollar continues to rally up again today. The dollar's really doing some damage here to the upside in the near term because, look, we have that inverse head and shoulders we've been talking about. And as of, let's see, did it trigger? No, as of yesterday, it didn't trigger. If it closes above today, it would trigger. The inverse head and shoulders would trigger. So we'll have to monitor that and see, does it trigger the inverse head and shoulders? If it does, the bullish bias would then really take over for a move up to this area right up here around 100.35, 100.4 on the DXY. So let's keep an eye on the dollar, guys, with that inverse head and shoulders. On the other side of the coin, and this is really interesting, generally, folks, the yield and the dollar generally move together. Like if yields are going up, usually the dollar is strengthening, right? In this situation, that's not the case. Yields are coming down, and we're seeing that. So there's a little disconnect here, which we have to monitor. Granted, it's all along this trend line, but let's really keep a close eye on this here, folks, because, again, we have to follow. Do we close? Do we confirm? And ultimately, you guys know I've been watching the weekly chart. Do we get a weekly close below this trend line? If that happens, it should start to dump out again. All right, we're going to flip back to Oracle here, guys. Oracle, look at the dump on an intraday 10-minute basis yesterday. Let's get rid of after hours for now. This was what happened intraday. It did come back a little bit off of those lows as buy the dipper stepped in. But again, the news is, to be honest, the news is shattering, right? You have this AI narrative that everyone is spewing out there that, oh, all these companies, whether it's, Microsoft or Meta or NVIDIA or AMD or Oracle, or, you can go on and on. They're all going to make fortunes on AI. Yet all of a sudden in the early stages, we're seeing Oracle have 14% margins. That's not good. That's the early stages. Just wait till there's more competition, right? And this is the kicker here, folks, is that this is something that as an investor, if you're long a bunch of these AI stocks, you got to be a little bit nervous about. And it should be a reality check, although the markets have ignored reality checks in recent days and weeks and months. But this should be big. The other thing is, I've been looking at the data for data centers, and a data center's depreciation is massive. So think about this. They're going to spend $100 billion on a data center. In 3 years, that data center is almost going to be worthless. And I say that because those chips that they're using now that are top of the line, Blackwell chips, they're going to be obsolete in 3 years. And so think about the money that's being put into these data centers. Like, we're hearing NVIDIA, $500 billion here, OpenAI, $100 million to AMD. All of these things in 3 years, the spending is going to be obsolete. That's kind of scary too. And it also brings up the idea that this is something, at least when they were building out the internet, that was like, okay, you're building out the internet. Granted, you had to upgrade to fiber optics later on and all these things, but the chip cycle is much quicker. We're seeing NVIDIA coming out with chips every 3 to 6 months, new chips, updated chip, better chip, etc. So just be aware of this. I'm here trying to give you guys it straight up. Okay, in any case, This was that big move on Oracle on earnings. It basically became the unloading point for institutions, right? Since then, sure, you've had little bounces along the way, but we've now seen at this point from the move on earnings, the high of earnings, the stock is now down 18%. Eventually, it's going to go right back here. Major support here at 257, gap fill at 241. That's where it's ultimately going to head. Not going to go straight there, but just be aware, eventually it's going to get there. NVIDIA, we're still keeping a close eye on this, guys. So it has not broken down. NVIDIA, one of the last kind of behemoths holding on to the levels, right? If you look at the Magnificent Seven, there's a few stocks that are still at their highs or near their highs, and NVIDIA is still holding on. You have a wedge pattern. It's still in between. Which way is it going to go? It was down yesterday after being up. Today, it looks like it's fractionally higher. Let's watch to see. Watch the key level of around 181.50 to 181. If we get a close below 181, that's a warning sign. If it confirms, game over. You should see a bigger correction. Now, I was just talking about how many other Mag 7 stocks have broken down. We've talked about Meta. There's your Head and Shoulders, the breakdown. I mean, look at this drop on Meta from almost 800 just on September 19th. So basically 3 weeks ago, and it's trading at 700 basically. It pierced even 700 right here a couple days ago. Look at Google, right? Google still near its highs, but this is a classic channel, and we're now forming what I looked at as a bear flag. Down move, inside bar. This resolves itself most likely to the downside. Amazon's a nasty chart, guys, and they got their Prime Day coming up and everything like that. But look at this trend line break, and what pattern is this? This is a classic bear flag again. All right, Tesla, we talked about it yesterday. Massive reversal engulfing candle. Yesterday, we talked about how the stock had that big rally. They were going to unveil this new car. Oh, my goodness, this is going to be amazing. I said, guys, don't get fooled. This candle right here, okay, this one right here, this red one, reversal engulfings are amazingly powerful. Yesterday, the stock opened flattish, ended down sharply on the day, 4.45%, until proven otherwise, meaning a close above this high here. This is a bearish pattern. Always go with what the chart is telling us, right? And that's really the kicker here. All right, let's flip over to Bitcoin. Bitcoin did what we said it would do, or what I talked about, folks. We talked about the 126 pierce as being a short-term high. Why? Well, just go simply to your chart. We have our 2017 high right here. Let me get my drawing tool. We have our 2021 first high, so we take the trend line to the highest point right there. And then look, each of these, and what was the recent one? Right there. And now listen, could we break above this? Sure we could, right? But as of now, what I always say to you guys is respect resistance until proven otherwise. And really, that was the right thing to do right there. Now, listen, it's only 4,000 off the highs, or even less than that at this point. But we just have to be respectful, right? I mean, the chart is here to tell us what the bias or probability is. Why would we ever be like, oh, screw the chart, let's just make up our own thing and say it's going to break? Or how about the better alternative is to let it break and confirm, and then say, okay, it's broken resistance, it's confirmed, it's going to the next level up now. Where would that be? 130. We talked about 130 as my next target level. And that's, again, the much better policy, to respect resistance and support until proven otherwise. Otherwise, you're just trading off emotion, which in bull markets can sometimes work. But again, eventually it doesn't work, right? All right, so we'll keep an eye on Bitcoin. Let's go to ETH as long as we have a little extra time today here. ETH looked like it was going to break out. It closed above. Ask yourself, did you confirm the breakout above these two lines? The answer is no. And sure enough, we're now back below. So again, this is why the confirmation signal is so important, folks. It's something I teach in the Winning Trader series. By the way, in November, we will have a major sale on the Winning Trader series, so prep yourselves for that one. Again, it is literally everything I know in course form. It is an amazing course, and I hope some of you guys on that big sale decide to purchase it, because it will change your lives if you study it, no doubt about it. But in any case, ETH still back below here. We have to see if it can get back above approximately 45.60, and if it can confirm, then it should go to 5,000. I do have it priced in that if we can get above this level and confirm, 5,000 or a pierce of 5,000 should be a foregone conclusion. Now, this is a great chart here, folks. because this is one where we have this upsloping parallel. We talked about the $4,000 level with this upsloping parallel. It is piercing intraday. Let's watch to see where it ends. Amazing move on gold, continues to be amazing. And by the way, I know people aren't talking about it, but gold going vertical is not something that is healthy for. So number one, if you're a gold investor and you got your long-term holdings like I do on gold, then this is awesome. I mean, it's just every single day up, and away. But when you look at the markets, is it a good thing that investors are feeling so compelled to FOMO into gold? Like literally central banks have been buying for years. Is that a good thing? Is that telling us that our fiat currency system that the world has, whether it's yen, euro, or dollars or anything else, is really strong? Is it telling us that our debt in the global picture, I mean, hundreds of trillions in debt now, if you add up all the countries and all their debt, I mean, is this good? Is it telling us that really the stock market is healthy when people feel that they need to be in gold massively? Like gold is outperforming the S&P 500. And really, people usually sell gold to buy risk assets if risk assets are doing well, and they're going to continue to do well, right? So why is gold vertical here? And I think it's a combination of all those three factors. But it would, to me, when I look at gold's price action, it's telling me that big money, I mean, this isn't, listen, mom and pops are buying gold. There's no doubt about it. But it's also just not mom and pops. Central banks, big institutions, even pension funds are now getting in on gold. And this, to me, is a warning sign for the stock market as well. It's not a healthy sign when stocks keep going up and gold is ripping higher like this. Eventually, someone's going to be left holding the bag in one or the other. Granted, they can both correct together for a short period, but then gold usually recovers very quickly, as I do think it will. All right, so let's keep an eye on this. I'm going to watch to see, do we close above? If we close above, do we confirm tomorrow? If we confirm tomorrow, then we start looking for the next level. But let's watch this candle today on gold. Silver pushing up beautifully. Remember, my upside target is 48 to 50 and change. I will not short this until it at least gets to this trend line around $50.75. Once we're there as a swing trade, quick short, yes, but then I will exit it on a pullback. And I still think we're going probably 60 to 62 on silver during this cycle. Oil continues to hold the gap fill. This was a great technical educational one. We've talked about this gap fill for a long time. Came right in, and then look at the bounce. Look at the gap fill right here. This is, again, notice price closed here. It opened here. It created a gap, and that was this move up. We filled, basically got back to the home base here, and this underbelly support. And that's where you're getting a bid. Now, the question is, are we making a bear flag to finally break lower, or will we go up and tag resistance at 67 and change? And then natural gas here, guys. Nat gas is trading still right up into this level here, folks. Pretty remarkable. Take a look. Yesterday on the daily, we did close above. But remember, did it confirm? Well, it hasn't had a chance yet, and it's coming right back in, just like ETH. And the beauty of this, notice how natural gas, look at the X marks the spot. And then if we look at ETH, X marks the spot. Both closed above and reverse, right? And so what I love showing here on this, folks, is that it doesn't matter what you trade. As long as there's volume. You could be a crypto trader. You could be a stock trader. You could be a futures, Forex. The beauty of everything I do on here is it's universal. And always remember that, folks. No BS, just charts. Screw the BS. I always tell you guys, you want BS, go live on X. Go live on Facebook, Instagram, wherever. You'll get all the hype you need. You'll get all the emotional triggers. Whatever you need is all on there. But to be honest, when I was doing that early in my career, and it was really early on in social media, but the more that social media has emerged, the more firm I've had to get on my logic and discipline to fight that, or you just stay off of it totally, and then you don't have to worry about it. But I mean, even if you flip on the news, you're getting narratives and all this other nonsense. The charts are so beautiful because they're absolute truth. A chart does not have an agenda. It's not trying, it's literally, it is what it is. It's the purest form of honesty we have out there. And that's why I use it, is because it's the one thing that's not going to BS me. And it doesn't mean it won't be wrong sometimes. And I fully accept that. I fully accept that my best case scenario, I win around 80% of the time overall. And I'm okay with that because that makes me a millionaire. That's made me a millionaire, a multi-millionaire. And I want the same for you guys. And that's why, again, I do these game plans to get you guys to say, you know what, I can do better. I can become more logical. I can become more disciplined. I can rise up above all the masses that are, all they're doing is on their phones, like, oh, look at this. They're saying this is the target price. Well, like get the heck off that crap. It's garbage. It's garbage. And you're better than that. All right. I love you all. Seriously. Step up your game. You could all do it. If I can do it, I'm average. Again, my SAT scores were average. I was a C, low B student. Like nothing spectacular. I didn't grow up with a golden parachute or whatever the heck they call, like a trust fund. I pulled up from the middle lower income. Both my parents were teachers. And maybe that's why I've kind of taken on the teaching role here. And I think that, by the way, I think my mom's proud of that, which is awesome. But again, guys, it's if I can do it, anyone can do it. And so don't let anyone tell you otherwise. And listen, you're not going to be 100%. I am not. Accept that you're going to lose, but read the charts so that you have a high win rate. That's the key. All right, guys, I'm going to get going today. I didn't even get to questions, but I promise I'll get to questions, guys. We'll spend a bunch of time on questions one of these days, or maybe I'll just do a stream of just questions at some point for you guys. Go have a great day. Love you all. Have a good one. Go make some money. Take care.